We are back here on Survive and Thrive, and today I wanted to go over a company that I have talked about previously. The last time that I did a cover on Dutch Brothers, ticker symbol BROS, was in November. And for any of you who have been following this company closely, you would remember that in November they were down 31% in their share price. And a big reason for that was because of a lot of growth stocks being under selling pressure at that point. And as you can see in this Motley Fool article, why Dutch Brothers stock lost 31% in November, we'll go over a few more of those details. Shares of Dutch Brothers took a dive in the month of November as a solid third quarter earnings report wasn't enough to counteract a widespread sell-off in growth stocks. Now, at that point, there was a big rotation out of growth stocks because of fears of tightening monetary policy and rising interest rates, and that is still the case today and into 2022. So there could be some future volatility for this company as well as many others, and it will be interesting to see how this year plays out. But if you do have cash on the side, you will be able to find some buying opportunities through this year to be able to round out any of your holdings and those companies that you really believe in. In the quarter, the company opened its 500th store and posted a 7.3% increase in same-store sales. Overall revenue was up 50% to $129.8 million as the company continues to aggressively expand company-owned stores with the goal of opening at least 4,000 stores across the country. That figure beat estimates at $124.9 million. On the bottom line, the company reported adjusted earnings per share of 23 cents, well ahead of estimates at a per share loss of 30 cents, even as adjusted net income fell. Though the stock gained 6% on the earning report, it gave those gains back up the following day and continued to slide because of the broader sell-off in growth stocks. We will see what will happen in the fourth quarter earnings report when they come out with their performance on February 9th. Looking ahead to the fourth quarter, Dutch Brothers said it expected to open at least 30 more stores in the quarter and called for revenue of $125 million to $128 million, a slight decline from the third quarter as the company experiences some seasonality with the colder weather. Still, that was better than the analyst consensus at $121.2 million. It also called for a mid-single-digit increase in comparable sales. Despite Dutch Brothers' slide last month, analysts reported favorably to the results, with several raising their price targets and reiterating their buy ratings. And I've mentioned this before, I do not have holdings in Dutch Brothers. I'm really hoping that they do have a little bit more of a correction down closer to their IPO close price at $36. And if they get into that $35 to $40 per share price, then I'll be looking to create a decent holdings within this company. And I think with this one, as I'll further cover in this video, it's one that you have to take a very long-term approach on because it is a growing company and they are starting to scale, but you still need to see more as time goes on if their management can actually deliver. While the stock is likely to remain volatile, Dutch Brothers appears to have a bright future ahead of it, with plans to grow its store base by a multiple of at least 8, and strong average unit volumes at close to 2 million. Shares have fallen another 10% in the beginning of December, potentially setting up a buying opportunity for this unique growth stock. Dutch Brothers growth at an unreasonable price, and this is what I had covered previously in the videos. They had their IPO debut in September of last year, and it was one of the year's hottest IPOs, increasing more than 130% in just 30 trading days. The strong performance out of the gate was not surprising in a market where investors are hungry for growth, and Dutch Brothers serves it with an industry-leading unit growth rate. While Dutch Brothers is arguably the best growth story in the restaurant space, it trades near 55 times fiscal year 2023 EBITDA estimates, a lofty valuation even when compared to high-growth peers. So, while the company certainly has most of the ingredients to become a massive winner like Starbucks or Wingstop, there's no way to justify paying above $52 for the stock. And I am in agreement like I said, I really think that a lot of this is based off speculation and the story behind Dutch Brothers. There may be a time when investors decide to not be in for the long haul and take their profits based off of where they've been and where they are now. It was a busy year in 2021 in the IPO space, with a record number of IPOs at more than 1,000 and well over 300 billion raised. One of the hottest IPOs of the year was Dutch Brothers. And if you didn't know this or haven't been to one of these, it's actually a drive-through. And so a key differentiator compared to the other chains out there, like Starbucks, where they actually have a brick and mortar store. And as you can see here, they've got quite the mix of different menu options: energy drinks, tea, coffee, cold brews, Dutch frost, lemonades, chai, as well as smoothies. So it appeals to any age group, and I think that's yet another way that they can connect with a larger customer base. As far as the company's store footprint, as of June 30th, the company had nearly 500 stores in 11 states. And as you can see from the map here below, they've got a lot of room to expand. So I see that that's going to be an opportunity for them if they can actually deliver, which is yet to be seen. But if they continue on the track with building 30 plus stores every quarter, then they could really get a lot closer to that total number of stores at 4,000 in the foreseeable future. As shown below, Dutch Brothers has seen steady growth in its shops since fiscal year 2011, growing at a compound annual growth rate of 12%, assuming it finishes fiscal year 2021 with 535 shops. However, the company believes that its long-term potential is closer to 4,000 shops according to its S1 filing, which would translate to more than 700% growth from fiscal year 2021 levels. If you look at the most recent quarter, Dutch Brothers isn't just growing for the sake of growth like some other brands, and is enjoying both strong same-shop sales and solid margins. In the most recent quarter, Dutch Brothers posted same-sale shops of 7.3%, 10.7% two-year basis across its system, with similar results at company-operated shops. I do see a lot of upside for this company, and in this other Seeking Alpha article, they also talk about the geographic expansion potential, and they actually have set a buy rating with a one-year price target of $66 per share, and they're currently trading around $45. I'll show that here at the end of the video. And their investment conclusion, they recommend that investors with long time horizons initiate positions in Dutch Brothers stocks on any pullbacks. And that is exactly my thought process and position that I'm taking right now. So as we get to February, they'll have their next earnings report. And we've seen this with a lot of companies, that it doesn't necessarily mean just because you beat the analyst estimates that it's going to create an upside potential for your share price. So more to come, and it could be a time, like I said, where there is yet another rotation in 2022 out of the high growth stocks. And if that happens and there's more of a correction to the share price, in particular with Dutch Brothers, then I will start my position and start building it heavily. It is an established company founded 30 years ago that successfully navigated through the economic uncertainties that unfolded following September 11, 2001, and the financial crisis of 2007 through 2008. Moreover, Bro's restaurant footprint spans 11 states with 500 stores, each of which on an average generated 1.7 million in unit volumes during fiscal year 2020. Bro's future is similarly bright, being highly underpenetrated in the US compared to Starbucks. The geographic expansion opportunity is substantial. With the expected exponential growth in sales, margin expansion is unlikely to be far behind. And that's really what is appealing to me as an investor, is I see that they do have a huge potential, and if they can actually execute, they will make their investors a substantial amount of gains. And that's what I'm looking for. As I stated at the beginning, They closed at $36 September 15th when they IPO'd. And there was quite the climb here, getting to their all-time high of around $76. That was back in November of last year. And as you can see, quite the sell-off, especially through November. And they got as low as $46 and currently trading at $45. So, like I said, I think that there is still a possibility that they will have a future correction that could take them even lower and get them closer to their IPO price. And so I will be closely watching for that. That's really what I wanted to cover today. If you have thoughts about Dutch Brothers in particular, leave those comments below and let's just exchange information about where we think this company is headed, and if you think right now is a good time to actually buy in, or if you think that it's still overvalued. I'm trying to build my community here on YouTube this year in 2022 and have already made a very good stab at that. Almost to 140 subscribers. Want to really climb to that 1,000 subscriber mark, and I'd be able to do that. I need each and every one of you to hit that like button, share this video as well as my others that you find value in with your fellow friends that are on YouTube, and let's make this a profitable year. Until next time, don't just survive, thrive.